Hello? Hey guys, can you hear me? Hey guys, can everybody hear me? Can everybody hear me?
Yes, we can.
I can hear you.
All right.
Yeah,
All
I can
right.
hear you.
Great, great. All right, I see 8 people's on right now. I'm gonna give everybody else some time to log in. Dow futures are up. Just they were down a couple of 100 points, maybe like 30 minutes ago, but now they're up. It's gonna be tomorrow's gonna be interesting for sure. Yep, there goes Voya. Yeah, and he's right. So, let me email. Yeah, the reason why they're up is because the Federal Reserve is talking about dropping interest rates, which they're going to do anyway. But yeah, I don't see him. Oh, yeah, there he is. He's in. All right. I see. Yeah, I see you there. I'm sorry, brother. I wasn't sure. I'm gonna give some people some time, just so you know that it's already recording. I already have this recording, just so you guys know. You see how it says? Well, you can't see from my yet, but I'm recording this, so I'll post it into the room once it's done. Or somebody put chat. Let me see. Chat. All right. Yep. Okay. Lewis is in. All right. Great. Great. All right. Cool. All right. It's 9 o'clock. I'll give everybody like 1 more minute, and then we'll get started. And anytime you guys have any questions, let me know. If you guys want to ask me something, with Zoom, you can share your screen so I can make you the presenter, and then you can share your screen if you got any questions. I think what I'm going to do is I'm going to start by talking about what the hell pivot points, how you add them on Thinkorswim. And then once I do that, I'll show you how pretty effective they can be, show you how to map your lines. And then we'll talk about how to find plays, what to expect for tomorrow, why the stock market rallied from September on, to explain what I think, all the long-term growth. I mean, you guys hear me. I sound like gloom and doom most days because I do think we're in for some serious pain, eventually. The markets can be irrational more than we can be solvent, but we'll talk about all that stuff. And then anything else, you can ask me some questions and we'll just see how this goes. All right, I'm going to get started. So, all right, guys, so thanks for logging in. Some of you guys are new to the room. A lot of you guys obviously are veterans in the room. We're a small room. The activity varies. Some days it's really active. Some days it's kind of dead. It just kind of varies. I'm on and off because of work. But we have some killers in the room like Voya or Arlo, Stevie, Milton. They're all fantastic. So I think they're all much better traders than I am, honestly. So you can also ask them as many questions as you have, as you want. But let's talk about a little bit about what are pivot points and why I started really adopting them. So initially, we had a person in our room that Gustavo, who's another fantastic trader, brought in, and she was a pivot point trader, and I never paid attention to pivots. And basically, pivot points are just support and resistance lines that automate. There's a formula in the pivot point that automates. And these lines that you see here, these red lines, and then this blue line and green lines, these are the automated pivot points that automatically map in your chart. Now, this one is more customized. This is my personal one because I like the colors, and I think I shared it with Voya, and he tends to like it too. But Thinkorswim has their own pivot points, and let me pull up another chart. So this chart is basically one side is the automated pivots, and the other side is the clean chart, because I want to talk about how you map your lines and how the support and resistance work. So as you can see that the pivot points are pretty powerful in the sense that if you look at on Friday's action, this stock VIR kind of gapped up to 84, couldn't hold that wick. And at the market open, it sold off, and look, it literally bounced right off, found its support level at this pivot. Now, the green pivots are supposed to be support levels below the actual pivot point. So this blue line represents like where the trend is. So like once a stock goes above the blue line, that technically the trend is bullish, and once it dips below it, the trend is technically bearish. These lines above here are considered resistance points, and they're mapped by 3 lines. So there's 3 lines, 3 resistance lines above the pivot, and then 3 support lines below the pivot. So and what you can do with Thinkorswim is if I left click and drag the mouse down, I can like condense the screen as you see here. And I can map. Now these are all my personal lines below because this is a stock that I probably traded before, I'm sorry. I'm gonna just clear that out so it looks nice and clean. So you can see this is the first support level below, this is the second one, and then these are some other ones, because in terms of pivots, what I do is, let me show you, I add the day, the week, the month, the year, and the quarter. So I add all those pivots so I can track each one of those areas of support and resistance. Does that make sense to everybody so far? Just let me know on the phone if that makes sense. So far, so good, guys? I'm not hearing anybody, so are you guys dialed in? Okay,
yeah,
that's good. Okay, cool. Now, in terms of mapping your just general lines, what I do is, so this is the same stock to the right, and what I do is, you know, generally I'll start from like a 4-hour time frame and then work my way down. So if I look at a stock like this, I would map my top line. All right, so this is wherever the trend changes, that's where you want to map, right? So this is the top point. This is where the next area of resistance is, and you got a line here. You got a line here. So you see these are areas where it kind of bounced, right? So I'm mapping all these lines because these are the areas where the stock bounced, right? So this is right here, and now this is like the current high into the close. All right. Now if you look at the support, so if you look at the chart over here, right, it coincides with a lot of these pivot points. So I use both. Like I map my lines, and as well as I use the pivots, because sometimes the stocks react to the T on the pivots, and sometimes they don't. So you have a general sense of support and resistance to know where your potential play is if you're going to be scalping. Now you just say, hey Omar, can I have your script? I'll share my script with you if you want it, but I'm gonna show you how you Thinkorswim has the same script. It's called SEV pivots. So what I'm gonna do is I'm gonna hit detach here so I can just have one chart. Let me just move this down. I want to show you guys something. I'm gonna excuse me. You know, I'll just do this. Just move that over. All right, so I'm going to show you guys something. I'm going to clean this chart out just so that if you guys have Thinkorswim charts, you can add the same pivots that I have. The way you do it is this: you click on this beaker and you go to studies and you type SVE. If you type SVE, you're going to see something that's going to say SVE pivots. Yeah, Brandon, I'll send the code. I'll send the code once we're done so you guys can see. But yeah, I just wanted to show you how you can add it as well. So here it is. It says SVE pivots. So I'm going to add it, right? And I'm going to add like several of them because remember, I want the day, the week, the month, the quarter, and the year. So I'll just click it. I'll just click this like 5 or 6 times. We already have the day, which is fine. As you can see here, here's the day, and it maps. See, these are your 3. This is the level of resistance, and then you got the pivot, and then you got the levels of support over here. So that one says day. I'll come to the next one and I'll change this. So this Thinkorswim actually has a better script in the sense that, I mean, you can get very specific. You can run a pivot for 2 days, 3 days, 4 days. I don't do that. I just do the day. I do the week. So, and if you wanted to be very particular, like you could change the color to indicate the difference between the day and the week. So you can make these, like for the week, you can make them all pink or purple or whatever you want. Just for the sake of this, I'm going to leave, for the sake of time, I'm just going to leave them as they are. But this is where you could go where you want to change, if you want to change the colors. So here, I'll go here, and then I'll change this. So I did day, I did week, I'm going to do month. I'm going to do quarter. All right, so we got day, week, month, quarter, and then we can do, I'll scroll down, and then year. All right, so we got day, week, month, quarter, year. I'm going to get rid of this. All right, so we have all those, and all you do is hit apply, and I'll hit OK. Now look what happens. This is not, and just so you know, like the pivots are real time. They're not like after the fact. Like this is not like an after the fact thing. This is how it works. Now, one of the things you need to know is when you have these pivots like this. Now let me show you something. Like if I do a smaller time frame, let me look up a different slide, like the SPY. The SPY reacts exceptionally well to pivots. Just so you know, so here's the SPY, and you can see how they've reacted to the pivot points. If you want like more space, what you can do is, and this is how I customize mine. I click on I click this little cog, and when I click the cog, I go to price, and this is my man Steve put me onto this. You go to price, and you can make the expansion like 20%, and you remove fit studies and hit apply, and it gives you like a nicer view where you can like move things up and down real easy. So I can like drag this down, drag this up a lot easier, and it's a lot easier and cleaner to follow all this. Now you see you can zoom in. Now let's say I want to zoom out. If I zoom out, you see how weird it looks now? So when you like play with it and zoom in and out, in order for you to get it to look back to its original state, you come to this icon here, you click it, and you go and click auto. When you click auto, it brings it right back. See? And then I can just drag it down and up. And this way I can track my pivots. And if you notice, look at the SPY on Friday. Look what happened. Look at how it bounced off these two pivots. So you see, look at this. At the open, it rejected this area. Remember, green, it stands for area of support. This purple is the pivot point, and these orange lines are the resistance points. In terms of how it normally looks. Now you're gonna say, you know what? How would I know like which is this the week, the month, the year? A quick way to do this is if you just right click on the line, you see after SV day. So this is for the day. You see? So this is the daily pivot. All right. If I come here, I can click there. This is the daily pivot. So if I come here, this is the daily pivot as well. If I come up here, this is also the day. All right, here you go. Here's a weekly pivot. The pivot's up here because we know the SPY dumped. And I use these in conjunction with my lines. So just because I have the pivots don't mean I don't map my lines. I still would like look at the chart. For example, let's say I was looking at Thursday's date. I would still come in and I would map my line. So like, for example, let's assume we hadn't seen this day yet, right? That this day hadn't happened. I would come here and I would map my lines just like this because it bounced here, bounced here, bounced here. And then I know, like, you know, where Thursday's action was. And then I would go, oh, post-market, this thing was dumping, so I would map this, it bounced here. So I'd map these lines as well. Does that make sense to everybody?
Yes.
All right. All right, so you guys follow how pivots work?
Yes.
All right, cool. Now, just so you know, that's kind of how I have my lines mapped. The way I really, me personally, is you guys, if you follow me on my Instagram, you guys see I usually have these boxes here already set up with like the different charts, and I'll have my my E-Trade level 2 right to the right of these things. And you can see these are my pivot points. So you see I have them all here already. So, you know, and then I just kind of look for the stocks that I want to trade. And then I attack accordingly depending where I think the trend is. But look, this is like AMD. Look, it gaps up at the market open, pulls back, kind of consolidates at the pivot. But when it spikes, look what happens. It rejects right at that pivot point. You know, pivots are very powerful. And again, they're only support and resistance lines. They're not an end-all, be-all, but they react well, especially to large caps. Look at Tesla here. Look at Tesla. Look at the open. Look at it. Gets rejected right at this pivot point, bounces, finds its support, and then takes off right at that pivot all the way up. So they're a great way for you to get support and resistance without going crazy. Like, so me and Voya killed it Friday. I don't know how much Voya made. I made a substantial amount of money, and I knew that it was heading down to this area because I had a pivot point now on my E-Trade on my app, on my phone app. You can actually add pivots, and it had a pivot at 611. And that's how I knew it was gonna bounce. And it literally on my mobile app, it bounced right at 611 and it took off, which was pretty incredible. Can you share your thought process on entering a trade once the ticker hits pivot? Yeah, sure. So all right, let's look at Tesla. I'll pull it up on the big chart just so you can see. All right, so let's pull up Tesla. Sorry guys. Shit. All right. So here's Tesla, right? So what I would do if I'm looking for a potential trade, first off, I'm mapping my support and resistance levels to see where the overall trend is. Oh, there goes Milton. Milton, dial in. I don't know if he knows how to dial in. I think he's drunk. All right, so
I'm here.
Oh yeah, all right. I thought you were at the bar.
No, I'm trying. I got this
cool.
shit muted because I got a lot of noise in my background, and I'm really trying to figure out my TV.
All right, no problem. All right, so all right, cool. So the question was, how would I know to enter a trade based off like a pivot point? So first thing I'm doing is I'm looking at the overall direction, right? So if we look at Tesla here, right, we see that Tesla is on a downward trend, right? And we see it when the market opened, it bounced off this pivot Thursday, and it just dumped, right? I mean, it just took a massive fucking dump, and then it popped up post-market, and then it dumped again pre-market, and it was dumping. Now, the way I would know to go in is, at least for me, I was risking when I took my trade personally. I saw that it rejected 650, and I think Boyer called it out. He said, "Yo, I'm looking to get in at 650." He started in. I started in on this pop right here. This is where I got in, where I saw like it was holding weakness. So what I do is I look for the stacking action. I look where the buyers are and where the sellers are, okay? And I look to see where the overall trend is. So when I saw this pop taking place, and I saw this wick, you see this indecision candle? Let me zoom in more. This is basically saying, hey, buyers and sellers don't know really which direction it's going in. But I saw that it rejected this level. And the reason why this was a strong area of resistance is because if you look at, the 650 level, one, it's a psychological resistance barrier. Two, you got a lot of people bag holding in this area as well. So you know that people may continue to panic. Plus the market was dumping. So I actually took the trade off my phone and I started in right here. And then when I saw this wick, when you see this wick went up and then it kind of pushed down, that's when I knew that the stock was going to sell. So you see a lot of sellers on the ask, you see a lot of red tape. So a lot of on the sales tape, you see a lot of selling going on. That's a lot of selling pressure. And that's how you know where the trend is. And you take the trade. When I take a trade personally, I'm saying, okay, where am I risking off? Me, I was risking off 650. So I knew if the stock was going to break above 650, I was going to get out. And that's what you got to do. You got to respect your risk. So you can't hold and hope, because what if the stock goes against you? You're gonna get crushed. So that's how I knew how to get into the stock. And I think if you look at the chat, I think I said it was heading to 611 and then 580. You can look at the chat. I mean, and Tesla will kill you if you do not respect your stops, because Tesla is reacting, is really moving with the SPY, and it moves in points and it moves very, very fast. Now in the opposite direction, I didn't trade. Once I got out that trade, I was kind of done for the day. But what I would have done, so let's say I would have started, so the stock gapping down, find its 611 support, and then gap up and then pull back and consolidate here. I would not, and if I see it bounce here, I would not go in chasing this. I would wait for a pullback to see if it forms support above the line, then that would be my risk. So had I seen this stock pull back and I see it start like gapping up here, you see how it kind of forms support here above the area of the pivot. this is where I would look in. I would look to see where the buyers are going in, and you see the volume coming in. But what you're also seeing is the stacking action happen on the bid, and that's how I would know to get in. And you can see how it just kept consolidating right off this level, and then look, it ripped. Now imagine if you were short, risking short here, you got crushed, you know? So you have to be very, very careful. You have to know where your risk is. Does that make sense? Modest, does that make sense? Does that answer your question? You're really looking to see how the buyers and sellers react to a level. And the only way you can really learn this, no guru can teach you this, no room can teach you this. You have to literally record these trades. So what I do a lot of times is I have Snagit. It's an application called Snagit, and I just, like, when I go to work, I record. So even when I don't trade, I have these tickers up. I have my E-Trade level 2 here, and I'm just recording. And then later on in the day, I come back and I watch to see how the price action reacts to those key levels to get an edge. It just comes with time. There's like nothing that can really prepare you for that. It's just experience and time. That's the only thing that's going to really teach you how to read tape and know when a trend is changing. There's no, anybody tells you any different, they're lying. So that's sort of how I use these pivots. When the pivots align with your support and resistance levels, that's when you know you got true areas of real support and real resistance. Does anybody got any questions before I continue?
No, I don't.
Okay, cool. So let's talk about, so just to remind you, look, here's an example of a chart, like to make this look right again. Oops, wait a minute, oops, what I did here. Okay, oh, I just had to move the time frame. All right, here we go. All right, so now you may be asking yourself, so how do you find a watch list? Now, we all know that the coronavirus right now is the #1 thing going on in the market. I have a coronavirus watch list that I posted this last Sunday, and I told everyone in the room, buy any stock, they're all going up, and they all went up exponentially. I think when I told everybody to buy, I think APT was like at, I don't even remember, what was it? It was like right around here. I think it was last Sunday, and then it went up to $49. Now, I'm an idiot. I didn't play any of those stocks. I wish I could say I took advantage of them. I didn't. But if I was looking for a watch list tomorrow, I would be looking at APT. Now, I'll share a trick with you guys that, yeah, oh, Carmen, yeah, it's an app called Snagit. I can share, I'll share it with the link. I got a cracked code, so you can download it for free, and then you can add it to your PC. I'll share it with the room after this. One of the things that I know a lot of people ask and nobody gives them any insight on is like, all right, Omar, you know, they're saying like stocks in a sector are running. How do I find those stocks in a sector? I'll give you a little trick that I do. So what I do is I go to Yahoo Finance, and if you guys want to add to this and you guys have your own like tips and tricks, feel free. But I go to Yahoo Finance, and let's say like I know one stock, APT, right? So I go, oh yeah, this is one of those coronavirus stocks, but I don't know what the hell are any other stocks in that sector. So if I type in APT, so here's coronavirus, right? I'm sorry, the APT is the stock. If you scroll down to your right, you're gonna see a section that says people also watch, and look, it gives you a list of other coronavirus stocks. And then, so like, it doesn't give you a full list. So like a trick to get other stocks, like, so let's say I click NNVC. If I click NNVC, you see, look, it'll give you more subsets. Look, it gave me APHI, which wasn't on, I think, on the previous page. And look, it didn't have IBIO previously, and I clicked that. So you can go here. Look, GHSI is another stock that's part of the coronavirus trend, and TNPX. So as you click, it'll give you other. There's like an algorithm that'll add other stocks, and then what I do is I just add them to my watch list. So like GHSI is like you know, it's under $1. It's a piece of shit. Normally I wouldn't trade these stocks, but you know, you could add it just to see how it trends. And I'm pretty sure it probably gapped up with all the other stocks. And sure enough, yeah, look, it was up running. And in terms of in terms of building your watch list, what you basically do is very simple, right? Like a stock like APT, because APT was so volatile. Let's focus on that. And GA, let's put that up. Okay. Let me pull out the other chart. All right. So here's APT, right? So very simply, what I would be doing here, right? You know, it had this gap down. So now you got a ton of bag holders, right? All these people buying into this, thinking that this was going to do something, and look at this. They all got dumped on. And look at the pivot points. Look, it couldn't hold this pivot. You could have went short, risking that pivot. Well, what you do very simply is you map your support and resistance lines, right? So I start from the top, because this is where the trend topped out and reversed, and I'm mapping the bounces. So it gapped down, and it bounced right here, right? Gapped up, bounced right here, right? Gapped down, bounced right here, gapped up, bounced right here. So these are the lines that I would be mapping, and if you look at this chart, which is a lot cleaner, you can see them there, right? Now, what do you think is for tomorrow? So tomorrow, I'm thinking, if I'm looking at this, I'm thinking, all right, this could run again, right? Because, you know, coronavirus can get worse and everything. But what's happened is so many bag holders that I would be looking for a key area to potentially go short and just take some quick profits off that. So let me just this here. So if this in the morning starts ripping and running, now this yellow line is previous day's close. I'd be looking to see, all right, where's the area where there's a lot of resistance, and this area up here where it tends to be the area of the most resistance, about this $34 level. So I would see where it reacts to this $34 level to potentially go short. Now, if you think the bias is long, you know, you look for an area to get in on a pullback. So let's say tomorrow, and this is kind of where it sort of consolidated, this $20 level. So let's say it gaps up tomorrow pre-market, and at the open it dumps and it holds 20. If it holds 20 and you see buyers stepping in and you see the SPY dumping and you see more cases of the coronavirus, then hey, maybe your bias is long and you think it's going to go. So you ride it long, at least to the next area where people, where the trend reversed, which would be this $26 level, and you would see how it reacts to that level to potentially take your profits. That's sort of how you trade, guys. People they overcomplicate trading. They make it more than what it is. What you need to know is where the buyers are and where the sellers are. All right, where the buyers got in and where the sellers got caught, are holding the bag to potential entries or shorts. And that's kind of how I build my watch list. So I map my lines in conjunction with these pivot points, and I make trades based off them. I don't overcomplicate it. If I see an area of resistance, like, so example, this stock got up to this $34 level, right around, like, kind of sort of right in this area here. I would be looking to see how it reacts to 34, because there's so many people that got dumped on. The selling pressure might happen here where people say, oh shit, let me get the hell out. The stock gapped up, and you'd ride this down. Even if the trend is still overall bullish, like it's going to keep running, you can still, this is an easy trade because it's an easy risk, because you know you're going to get, more than likely, you're going to get a reversal based on the fact that you got so much resistance in this area, and you just take it down. And let's say it bounces right off this area, 29, because this is where the buyer stepped in originally. This is where you look to cover and then trade the trend if it's still heading in that bullish direction. Does that make sense to you guys?
Yes.
All right. What questions you got about anything that I talked about?
I don't have any. I don't know if the other guys have.
All right. Well, let's just talk about an overall watch list. Like, how do you find a watch list? Now, I experienced something today looking at FinViz that I've never seen in all my years of trading. So just to show you, does this work for swing trading, and when do you make a prediction to where it's going? Are you based it on the next pivot point? So the question was, that's a great question from Brandon, was, does this work for swing trading? Yes, it does. And when you make a prediction to where it's going, are you based it on the next pivot point? Yes, sometimes, but generally it's a combination of the pivot point and my own support and resistance levels, because sometimes they don't completely line up. But yeah, a lot of times I use the pivot points to kind of get a sense of where the stock is heading in the direction. So yeah, that to answer your question, that yes. Now let me show you guys something. So when I do my like my watch list, what I do is I go to Screener, and oh yeah, let me use a different app. This, you see how I'm getting all these pop-ups? There's a and I forget, a browser called Brave. So I downloaded it. I highly recommend it. It's really, really cool. But if you go to Brave and if I go to FinViz, I won't get those stupid pop-ups. It's one of those like private type browsers. So so when I create my watch list, I go to Screener. All right, and when I go to Screener, what I do is I go to All, and then I keep it simple. So I look for volume, let's say over 1 million shares traded, and then I do from change from the, let's say I do up 5% generally. Now, this is the first time I've ever seen this ever since I've been trading. 439 tickers are popping up on my scanner. That is insane, and that would take forever to look through. But you know, generally, when I do this on a real good day, you get like 60, 70 tickers. I've never seen this ever. That's how volatile the markets are. But just to show you, there's a couple of ways to do this. So you can filter by volume. So what I do is like I'll hit the volume button, and then here it gives you the most traded to the least traded in terms of volume. I mean, this is nuts. I've never seen anything like this. And then you can hover over the icon, and it gives you like the candles, the daily candles, to get a sense of what to trade. So like a stock like IBIO would be great for me. Like this would be a stock that I'd be looking short. You know, a GE. You know, these bounces happened because the SPY gapped up at the close on Friday. AMD. So that's why they all gapped up at the end. On the Friday made everything go green towards the close because of what happened with the SPY. Now you can narrow this down, so you can say, oh man, these are too many stocks, right? So I can do like a change, let's say 10% from the open. And now I got 132 stocks, and then I can kind of go through that and kind of find what I like based on what I like to trade. Or, you know, because these are far too many still, you can go to like up 15%. And so you can change your criteria, and then you can do the opposite. Let's say you want to see stocks that close down. So you say, hey, I want to see stocks that close down 5%, 87 tickers. And you can see, like, what I like to do is I like to look for stocks that are gapped up, that had like a first red day. So I'll look for something like let's see, CODX. It had 2 green red days, but this is a stock that I would potentially look to short. ALT. All right, let's look at ALT. So I'll put up ALT. Okay. So look, these are lines. You see these lines here? These are lines that I mapped previously. I didn't even do anything, and look where it bounced right off 320. So this is a stock. You know, this would be a great to short. So once this stock breaks below this 315, hops and rejects it, you can see that this is it. Like once it gets down to this level and it can't hold, you take it short. Now you're gonna say, well, Omar, that's fantastic, but I can't short it because Thinkorswim doesn't have the shares, or E-Trade doesn't have the shares. Welcome to trading. So a lot of these guys who follow like Steven Ducks and all these guys and Bao, these guys have these you know, they have the brokers, and they have the Trade Zeros, the Cobras, the center points, and they get first access to borrows. So what people don't tell you about shorting stocks, shorting these low floaters or these hard to borrow stocks, is that you gotta be able, one, before you even get into the trade, you gotta find the shares where they're available, and then you gotta pay a fee for each share you borrow. So you're already down. So you gotta be comfortable with that. There's ways around that. One of the ways around that is to trade options. So, you know, if you can't find shares, sometimes those stocks are available to trade as options. You can buy puts. So, like for example, not to say that I would, but let's say this stock couldn't hold, you know, 320. Like it gaps up tomorrow and it starts fading. You can then buy options looking at a strike price of 250. And you can see right now they're 50 cents for each contract. So, and then one contract equals 100 shares. So, you know, so you're basically getting 100 shares for every contract that you're in. And you can trade these options just like you would stocks, where you're looking to be like one strike price out of the money. And that's for another time. But you can do this as well. If you don't, and I recommend like newer traders, like if you don't have any money, my advice is to probably trade the options as opposed to the stocks, and you can grow your account faster with less risk. As long as you respect your stop losses, you have to be very, very, very serious about getting out of these stocks at your stop loss. So a stock like this, which is probably a piece of shit that's heading back to nothing, you know, to me would be a great short. Now, what I do when I pull up a stock, the first thing I do is I look at the yearly. So let me take off these pivots because I have just so I have a clean chart again. All right, what I do is, and I'll show you how I work this. And look, these are lines that I mapped previously because this is a stock that I traded in the past previously. Let's see, let's go 5 years. Yeah, that's why I got all these lines mapped. And you can see, look, every time this stock has a rip, it always pulls back. It always finds itself back to nothing. Why? Because this stock is dog shit. All these stocks are dog shit. Look at this stock. Look at it on this day. Gapped up, couldn't hold, faded. Spikes and fades. Spikes and fades. So what do you think is going to happen with ALT? It's going to fade. It's going to fade. It's heading back to this, you know, 160 area. So what I do is when I see a stock spike, I immediately looking at overhead resistance. So like, let's say I saw this spiking pre-market, I would have immediately pulled up the chart, and I'm gonna just remove all these lines. I'm just gonna clear it completely. So I would have removed it completely, and I would have said, okay, where is the overhead resistance? So I would have been looking to probably right at this level here, because you look good. This is where on the daily, this is where all the people. Look at this. This is where all the bag holders is. So I would have mapped that. I would have mapped the top of this candle too, right? Because this is where the gap filled as well, and there's also this level here. So I would have been looking to map these levels to see where the stock is reacting. Now, it got up to 5, right? And then it gapped down, and then it gapped up. It never reached there. But look what's interesting. When it gapped down and spiked, look where it rejected 386. Why did it reject 386? Because 386 is an area where there was a lot of overhead resistance. You see, it's not an accident that these things happen. It's very important you know where support and resistance are. Does that make sense to everybody?
Yes.
Now I'll show you something else for you guys who love trading options and love trading the SPY. I think the pivot points are fantastic for those. Let me just clear this. For you options traders, if you look at the SPY over the last 5 days, this was on the 25th. Look what happens here. It spikes right into this pivot point, sells off, bounces right off this pivot, gaps up, gaps down, kind of consolidates at this pivot. Look, finds the support, gaps up. Look what happens the next. Then this is post market, gaps down, gaps up at the market open, right? Look where it gets to this pivot point, kind of consolidates here, can't hold it, breaks down. When it breaks down, and remember, when you have this problem, all you do is you click auto, and then it clears it out. Look what it did. It gapped down and look, found its way right to the pivot point. The SPY and all the large caps, Facebook, Apple, Microsoft, Google, if you look at all the charts, they react very well to the pivots. The reason why I think that is because what happens is these hedge funds and like they hire physicists out of like MIT to like come and help them with their algos. And I think when they design their scripts, they use these pivot points as like a barometer in their scripts. That's why they react so well to them. So even though the markets have been like completely irrational and crazy and dumping, look what happened on Thursday. Look, despite the market opens, look what happens. It can't hold this pivot point right here when the market opens. Look at that. At wick, all that selling pressure came in. Look, all that stuff. And look, it dumped, and look where it bounced off of, right off this pivot, gapped up. Look at this, rejected this pivot just momentarily, spiked, got right back to that pivot, and then dumped. Look where it heads to. It headed all the way down to where this pivot. This was pre-market on Friday. Look what happened. Gaps up. This is the previous day's close price, that yellow line. But look what happened when the market opened, right? It dumps. Look where it bounces right here. Look where it gaps up to, right at this level. And, you know, I have the 15-minute time frame. When I'm trading, me personally, I like to use the 2-minute time frame. So here, let me put on the 2-minute time frame so you can see, look, spikes. Look what happened Friday. Rejects right into this pivot. Gaps down. You know, obviously gets below that pivot. What you do is you want to see where the next line is below. If there is one, you left click on the mouse. You just kind of drag it down to see if there's another level. But there wasn't any underneath. So remember, the pivots on the NOB, or you still want to map your support and resistance line. So, like, you know, if I'm looking at a stock, you know, I want to know where the next level of support is. I would go on a higher time frame to see when the last time this stock was down here. So look, I've got the 4-hour time frame, and this is a key level. So I would map this line here because this is where it kind of like took off. I'm also mapping this line here because this is when it gapped up and pulled back. So these are 2 key levels, and look what happened. So it got near that level, gaps up, pulls down, consolidates. Look at where it bounced off. That line, look, right here. You see why you see why it's super important to map those lines, those 4-hour time frames, because these are where the buyers and sellers stepped in. And if you notice, that's kind of where it took off. So right into here, you know, it kind of consolidates, but look, it bounced off this pivot again, and then you get rejected, it bounced off this pivot again, and now it's up. And we'll see what happens tomorrow. What's cool is that once the pivots are on your chart, you don't have to worry about setting them. They're automated. Yeah, so which is really, really nice. All right, so I'm getting a couple of questions. So if you were to grow a small account, you would choose to trade options rather than equities? Yeah, because the reason why I would choose options is because you have the access to trade more. You have a bigger variety of stocks to trade with higher returns and less capital to invest. So with like $2,000, you can open a cash account with like Thinkorswim, and you can trade all these large caps. So like, for example, let's pull up like Facebook. Let's look at what are the options for tomorrow. So let's say for tomorrow, we think, hey, you know what? We think that futures are up, and maybe maybe tomorrow Facebook is going to retest 200, right? So let's say that's your thesis. I'm just making something up. So you're looking to buy some potential calls, and let's look at the call prices. They're pretty pricey for Facebook. But let's say you wanted to buy, if you bought one contract of 550, so 550 times 100, what's that? $550, right? So you could technically trade Facebook with one contract. You can't really buy much shares, right? If you have $2,000 in your account, you basically can't get shit, right, with Facebook, right? Because it's $192 for one share. So that's what the power of options allows you to do, and the returns are so exponential. You know, when I first started trading, I learned from watching like the Tim Sykes videos and all that, and I didn't know any better. But if you want, in those trading small caps, your earning potential is limited. Now with options, it's unlimited. But on the flip side, you can lose a lot of money. So you got to make sure you're understanding your risk. So if I was a new trader, I would be looking to trade options. So let's say, for example, one of you guys took my advice last Sunday, and you bought APT. You bought APT calls last Sunday night, and you would have, and there probably were less than it. I would imagine there were probably like $1 probably last Sunday night, because it was like $5 stock back then, and held it. And because you say, hey, the coronavirus is serious, so I'm gonna hold out for a strike price of March 20th. You would be up so much money right now. I mean, an insane amount of money with very little risk. 10 contracts would cost you probably like $2,000, and you'd be up like $10,000 right now. something insane, you know. So yeah, I suggest options if you got very little money. And Voya, Milton, Gustavo, if you guys want to add to that, feel free, because you guys all, know more than me in terms of options. But that's what I would recommend. What do you suggest to traders who are unable to trade the early morning hours due to work and school? I would suggest that you swing trade. So Mark, so these stocks, these coronavirus stocks would be a great swing trade where you would be looking to say, okay, you know what, APT took a beating, it's holding off 1667. Let's say you would set an alert to see how it moves. So let's say tomorrow pre-market, it dumps, right? So it starts dumping, but you see that it holds this 1667 level, then I would take a swing trade risking, either the 1667 level or the next level below it. Obviously, and what you do is you got to say, well, Omar, how do I determine my risk? You can determine by, and I say try never not to risk more than 3% of your overall account on a trade. But if you got very little money in your account, obviously you're gonna have to risk more. So I like to do dollar amounts. So let's say, hey, you know what? I don't want to risk more than $100 on any given trade. So if you're getting in at 1667 and you're only gonna risk $100, then you cannot risk more than 1557, because if you're buying 100 shares and it goes below 1557, that is a $100 loss. And you can hold these over a certain amount of days, like gold. Like I would be looking to buy gold stocks because the market is dumping, so you can look for a gold stock. And what I would do if I'm looking to trade, let's say gold, or just swing trade a stock in general, I'm using a bigger time frame. I'm using like a 4-hour time frame, and I'm looking to take a trade. I'm looking for stocks that maybe had a couple of red days because I'm thinking of green days coming, or I'm looking for it to break above a key resistance level. So you can say, hey, this is where we're on the way up. This is sort of where it formed its strong support level before it became resistance. So if it could break above 2920, what you could do is you could set an alert to say, so if you right click and you click create an alert, you can say, 2920, and then you can write, break above, go long, something like that. And then what happens is it will alert you once it breaks above this to potentially go long. Does that make sense, Mark? And now Market Doc, that's how I guess that's what your name is. Now, so if your next question is, hey Omar, how do I know where to sell? Then my potential price target would be the next area where people got dumped on. So if this is where people got out, people got dumped on, I would be looking to get out right at this level. All right. Or, anytime, you can use shorter time frames to kind of figure that out as well. So if you're getting here, say, hey, you know what, this is on a smaller time frame, this is where people got caught holding the bag. So if I get in at 2920, I'm looking to get out at, this level here, which is 3492. And you just take trades like that. And, people think that you need to trade a lot of shares. You don't. You can take 100 share positions and you can risk, 1 or 2 points and, just swing them for a couple of days. And what's great about swing trading is that, if you're under PDT, you don't have to necessarily worry about that affecting you, because once you hold it overnight, you're good to go. All right, so again, a couple of other questions here. I will have to do more research into options. Yeah, maybe I'll do like an options one eventually. Omar, how do you draw the white dot? So, oh yeah, this white dot, this is from a script that I have. I have a script that's in the actual chat room. It's called support and resistance. So what I do is, it's this SR script. I'll show you where you can find it in chat. Actually, if you go to the pinned messages, it's we got a bunch of them. It's this one. It's this script right here. All right, it's this script right here. I'll add my pivot point script there too. But what I do is, if you hit apply, it gives you all this stuff. So it's really cool in the sense it maps. It gives you the dots you see with the numbers, the prices. But this may be like too much to see for everyone. So what I do is I go into the support and resistance script. And then what I do is this gain line, I remove it. So I come in, I just remove that line. And let's say I don't want to see the numbers. I go to pivot low and I remove that. And I go to pivot high and then I remove that. And then when I hit OK and I hit apply, now I just see my dots and I see these lines. I hope that answers your question. And then you can make this like whiter if you want. You can change the color, but that's kind of how I got this to work. So hopefully, Hobby, that answers your question. Are the commissions on options the same as equities? No, they are not. So you have different brokers. Some of them are free. Some of them, generally, it's 65 cents. With Thinkorswim, you could probably negotiate that down. I haven't tried yet, but you probably can. Yeah, it's like 65 cents a contract, per contract. Learning options, do you guys have any sources you could refer me to? YouTube channel? I'll look into that. I would probably say look at, what's his name? The Indian guy. Oh, shit. Milton, help me out. What's that guy's name? The big options trader. Damn, I can't remember his name right now. I'll get back to you. Yeah, there you go, Sanglucci. Yeah, that's the guy I would recommend you looking at first, Sanglucci. All right, I'm just trying to look at your questions. Would you buy, I'll just move this over so everybody can see. Would you buy the contract closer to what the stock is trading at now, or you go farther out? SPY 296, do you think it's going to drop? Is it more beneficial to buy a put or lower or higher? So you want to trade the trend generally. If you're day trading options, then you would apply the same strategy as you would to equities. You're trying to get in and get out fast. Because so for example, let's say I'll just use this stock. So let's say the stock spikes up here, APT, and it can't hold this level, right? You see, and it starts dumping, and you think that it's heading on a downward trend. So what I would do is I would then be looking to, if it's at currently 44, and I think it's going down to, let's say, a minimum of the next level of support, let's say, which is where it bounced down here originally, which is 29. Then I'm looking for a strike price, one or two puts out of the money to get into, and then I just go from there. Just think of it this way, if the price is going down and you're buying a put, you're gonna make money. If it's going the opposite way, you're losing money. So I try not to overthink this. There's like data and that, data and beta, whatever that shit is. All these different things. I don't pay attention to none of that shit. I just trade it exactly the same way I trade an equity. Hopefully that makes sense. We can do another video and do like very specific targeted trading towards options at another time. But that's sort of the quick response. Hopefully that makes sense. Omar, do you swing trade much? Also, I'm curious. Yeah, I have an IRA, and I swing trade in the IRA. The biggest trade I've had to date is PTN. I took about, I think when I was fully in, I was about 130,000 shares in at an average cost of like 41 cents. And I got out of it. I actually held it for too long. It went up to like over $2. I didn't sell the way I should have. I sold like half my position at like, I think it was like 130, and then I held, and then I just started dumping, and I got out the rest at like 104. Yeah, so I'm looking. I haven't taken another position yet, but for a swing, but I plan to soon. What does bag holder refer to? A bag holder, good question. So holder is this. It's basically somebody who's going in one direction and the stock goes into another. So let's say, for example, I was, and this is that was Modest's question. So let's say I'm a guy right now and I follow Ross's warrior trading strategy, and I see the stock is right here 41, right? And it's breaking out, it's gonna make a new high, right? So they go in and you get in right here, like 42 bucks, and you're like, yeah, this thing is gonna go up. So you're in and you're like, yeah, it's at 43, 42, I'm getting rich. And then all of a sudden, it reverses and it just dumps on you. And you holding your position going long and you get stuck going long, but the stock went down. So you took a big loss. That's a bag holder. It's when a stock goes against you. Hopefully that makes sense, Marty. All right. Let's see what other questions we have here. Holding and hoping. Yeah, don't ever hold and hope. You take your L and you keep it moving. Stock trading's about reserving your capital. It's not necessarily about making a lot of money. I don't know if that makes sense to everybody, but it's all about preserving your capital. Otherwise, if you don't have capital, you can't trade. So you have to preserve your capital, so you have to know risk management. Okay, can you trade options in an IRA? Yeah, you can. You can trade options in an IRA. I knew Ross would come up. I'm changing brokers as my previous broker. InvestEdge was too high commissions. I went to try IB Lite. Would open an account IB Lite. Yeah, try IB Lite. See how that works. You can try them. There's like a whole bunch of brokers that you can use for options that are fairly cheap. All right. Yeah, that's all right. Good. Yeah, and I know Carmen. I know you took like 600 and turned it to like 3,000. That's awesome, man. Good stuff. Good stuff. All right. All right. So in terms of, let's talk about real quick. There's like two other things I want to talk about before we end this. I want to give you an overall understanding of what's happening in the market, because I don't see any chat rooms talk about this. And a lot of the trading gurus do not talk about this stuff because, I don't know, they just don't. And I think they should, because, I mean, if the market is dead, you can't trade. So let's talk about why the market, and let's pull up the big boy. Let's pull up Apple.
It's because of the Democrats.
I'm gonna show you guys something. It has zero to do with politics, by the way. I'm gonna explain to you why the markets are up. It has nothing to do with politics. Had Hillary Clinton won, the markets would still be up. If Bernie Sanders was president, the markets would still be up. And I'll explain why. How it has really little to do with politics in a lot of sense, in a major way. Now, what people don't talk about is this. So this was an article that was back Wednesday, October 23rd. And what happens is the Fed is sharply increasing the amount of help it is providing to the financial system. All right, so the New York Fed announced it's increasing its temporary overnight repo operations to 120 billion a day from the current 75 billion. In addition to the repo increased term, repo operations are rising to 45 billion from 35 billion. I'll explain what that is. Now, I want to show you one other thing before I start talking about this. Where is the sentence? Shit, it doesn't tell you. I know I thought I had it here. Starting Federal Reserve. Announcement came, Federal just signed $100 billion. Okay, here we go. A mid-September cash crunch in the repo repurchase market led to the Fed to conduct a series of repo and term repo operations to make sure the banks have the overnight funding they need at rates within the central bank's intended parameters. Funding constraints caused the repo rate jumps to as high as 10% from around 2%, while the fund barely rose 5%. Basis points in the average. Now, what does that mean? Why am I bringing this up, and how this correlates to the market, and why I say like that it doesn't really matter who's in office and why this would have happened? So I don't know if you guys were aware of this. Now, this is Apple. I'm just going to use Apple as an example because it applies to pretty much every stock on the stock market. This is a one-year chart, but I don't know if you remember, but I remember back in like towards the end of the summer, like in August, I want to say that the market just it just kind of died. Like, it wasn't a lot of volume. And I know people say it's because of day traders. That's bullshit. I'll tell you why. The average person in the market, retail trader, trades about a little over 100 shares a trade. They don't trade a lot. They're not trading big positions. It was basically because the market was flat. It was dying. And if you look here, look at these candles. You see how it started? You see how it's dying now? Look what happened. It was all consolidating. This is September, and then what happened? This is what I think happened. I think the banks were insolvent, and the banks didn't have any money to lend to each other. And I think what was about to happen was a market crash. So what happened was this: the Federal Reserve started printing money and giving them to the banks. And then as soon as that happened in mid-September, and you saw, right, and it was only supposed to be for a few weeks, It was only supposed to be a temporary, a couple of weeks, and then they came out with the other press release where they said starting Thursday, repo operations will escalate to 120 billion from the current 75 billion. Central banks committed to collaborate the right amount of funding needed to keep the markets operating properly and to hold the overnight funds rate within a target. So basically, what happened, guys, was the Federal Reserve, and you can go look at the website if you think I'm lying. They said, hey, you know, we're seeing some inactivity in the markets. There's some issues with the repo, and the repo market basically is just banks lend each other money at night, and they charge a fee. So like Bank of America and Citibank, Citibank is coming to me saying, hey, you know, we need to borrow this amount of cash because we need to pay our customers. We need to have this amount of reserves in our bank accounts, in our bank, so that customers can draw whatever funds they need to draw. They go, here, we'll lend you this money at this percentage rate. You pay us back when you collect your interest, and that's kind of how it works. The banks didn't have any money to lend each other. That's why you saw all of this flat. Now, you can go look at any chart. All the charts were flat, and the volume was fading. Then all of a sudden, when repo started, look what happened. The market started fucking taking off. And then it was supposed to be temporary, and then they said, oh, no, you know what? We're going to have to add more liquidity to the market. So they added more liquidity, so the algos kept buying. And then they said it was supposed to be till November, and then November they go, oh, okay, we're going to extend this into the new year. So they extended it to the new year, so the markets just went parabolic. And then they said, oh, you know what? We're going to continue repo operations till March. Let me tell you something. The markets are insolvent. They don't have money. And what's happening is that's why you see this crazy going. The printing has to continue. And if it doesn't, once it stops continuing, the market's going to crash. Now, this coronavirus happened at a great time because in the sense that the Federal Reserve was going to cut interest rates anyway, regardless of the coronavirus, but now they got an excuse to do it. Because the reason why the futures are ripping, that we see this rip right now in the futures, is because the Federal Reserve, watch, and I'll pull up the news right now. Oops, sorry. So Federal Reserve, Trump calls for, let me go to news. Fed, this is why they're moving. So the Fed's ready to cut rates despite doubt they can offset virus. So they're gonna cut rates, and I think they're talking about doing it Wednesday. That's why the futures are ripping right now, because of that. But let me tell you what's overall is gonna happen when the Fed. So right now the market is pricing in the fact that the Federal Reserve is going to continue to cut rates. They're going to continue to cut rates up to zero. What happens is, though, once the Federal Reserve cuts the interest rates to zero, there's no like factor into saying, oh, we have this to look forward to keep the markets going. So the Federal Reserve cuts interest rates to zero. There's nothing left to continue to boost the economy, so the economy is going to crash. That's when you really got to expect a crash. Like, what I think is going to happen now is that once they find the virus, the markets are going to rip back to all-time highs, and they're going to keep going as long as the Federal Reserve keeps printing money and they continue to cut interest rates. But once interest rates are at zero, it's lights out. There's nothing to keep the markets going. And because it's all priced into the market, and you're going to see a crash. You're going to see a stock like Apple go from 300 back, and I'm not exaggerating, but what I think is going to happen when we get this meltdown, you're going to see Apple heading well below, probably like to 90, in months, not years. That's the kind of meltdown that's coming. So just keep that in mind. So it's going to be a great time to buy dips, especially once they start talking about a vaccination. So get ready to buy, if you're an options trader, buy those calls. Get ready to buy calls, and hold some swings. And because I think eventually the markets will go back to new highs. But once interest rates are at zero, it's lights out. What questions you guys have?
Omar.
Yeah.
One thing also to point out, I mean, this is kind of like similar to what I always keep talking about. This guy, well, not this guy, this trader. That they call him the boy plunger. Whatever he's saying is like kind of like goes along with your theory. In around September, and you can see on the news, the Fed, they asked for the banks if they have liquidity, which is pretty similar to what you were talking about.
Yeah.
And if you read that book, The Reminiscence of a Stock Operator, you're gonna see the same thing. The same signs 3 months, 4 months after that's when the 1929 stock crash happened. You can read it. I mean, it's the same thing.
Yeah.
And also another thing to notice, like, just looking at what chart. What is this? Apple, right?
This is Apple.
I'm on my phone. Sorry, I cannot really.
Oh no, that's all good. You can actually download Demon on your phone.
Yeah. I have it, but I'm on my phone.
Okay.
So, like, I don't have like a Samsung 20 like you do. But you can also look at the volume. Look, it keep rising up, but it's like barely any volume.
Yeah, there's no volume.
Yeah, so it's like it's just smoke that is is going up for no reason.
Correct. It's what so what I tell people is these physicists that they hire, right, are like they don't go to MIT to learn how to like code for stocks, right? They probably come out of there. Some fucking Goldman Sachs guy throws a boatload of cash to some physicist, PhD physicist, and then they go and they look at charts and they go, okay, how can I make this work? And they look at support and resistance, and that's kind of how they get a sense of. That's why they react so well to pivots, and they probably have something in the algorithm that says, hey, if the Fed cuts rates or prints money, buy, and that's kind of why these things are just going up like irrationally. That's why fucking Tesla went up irrationally. Look at Tesla. Tesla looked like a penny stock. They had no reason to do this move, But if you look at what happened back in mid-September when they started, pumping the markets, you saw boom. This day is right. So the 23rd was what? Let's look at that article. It was the day that the Fed, that the thing said, hey, they're announcing they're adding money to the repo market. Once they did that, right, on the 23rd, look what happened. This was on the 23rd. Look at how little volume it had. Boom, it just went up and then it just fucking ripped. You don't hear any chat rooms talk about that.
Yeah,
they think that. Go ahead.
Yeah, and also, sorry. Also, I believe we were talking about this when you said that, it was going to go to 1,000. So, and then, and then it came back, and then I was like, it might go up, but when it crashes, it's going to crash hard because there is no volume. Like, and even this is not like if you look at the volume, this is not even the main crash.
No.
Because it's like low volume still.
Yep. Like these stocks, all of them. And that's what I'm saying, like, I'm waiting, I'm preparing for my biggest trade. My biggest trade is going to be like a put on the SPY, and it's going to be like I'm going all in because I know that when the crash comes, you're going to see, like, this is a precursor to the crash. This is a little precursor, but when the crash really happens and rates are at zero, you're going to see a stock go from here to here in days, in weeks, not months. It's going to literally just give it all back. Because what happens is everybody's going to be shooting to pull their money out. All the pension funds, really, the pension funds are what driving the markets right now. So once the pension funds pull their money, it's over. It's lights out. Because retail traders aren't even in the markets like that, like people think. It's bullshit, and they're trading very little shares. And because these stocks are so expensive, they can't even buy them. So, most retail traders don't know anything about options. They don't know what the fucking option is. They just know, I buy shares of a stock and it goes up and I make money. That's what I knew 4 years ago. I didn't know anything about any of this stuff. So I just want you guys to keep all that in mind. So the volatility is going to be crazy. So I don't know what's going to happen this week. We'll see. I think we're going to get more fade. I think more cases of coronavirus are going to appear, and the market's going to react. And there's something in these algos that probably going to trigger it to sell off more, and they'll continue to sell. Now, if I was you guys, in terms of what to look for tomorrow, if you're, a day trader and you're real comfortable, I'd be looking to day trade one of these, coronavirus stocks. But if I was looking to take a nice long position, look for gold stocks. Gold is going to go up, guys. Gold is cheap right now. Gold, I think gold is going to be where Tesla is, was at 900. I think if you look at this gold, I just took one sample gold stock, but you notice it dumps with all the other stocks. But I think gold will go up as everything else will go down, because gold's the world's reserve currency. So it makes sense. Gold, silver, platinum, all of those stocks are going to continue to go up as all these other stocks go down. So what I'm looking to do actually personally is buy some gold bars and just put them in a safe deposit box and just leave them there, because I think they're going to be worth a whole lot of money.
Where do you live? Where do you live again?
I live in New York.
Yo, it's me, Gustavo, though, so I can go take you home.
Sorry, bro.
So yeah, I bought calls, right? You call me crazy.
Yeah.
I'm holding it. So, but I'm expecting a thing, if I remember from what the chart, like a 305, 307, that, or I will sell. Or
yeah,
I bought it when it was like 290. No, what did it was? Like 293, I think, or 292.
Yeah, and what's interesting about the SPY, it literally took off right at the pivot point of 288.14. I mean, literally to the penny. Look at this.
Well, it was kind of like, I know you go by the pivot, but it's pretty much the same, like, support resistance. I just go by it. And
yeah,
I noticed, I think it was in the daily that I looked, or I'm very big on hourly chart. I don't really go any lower than that. Because of my job, it cannot be like, looking at every minute candle.
Yeah.
Just too crowded. But I saw if it didn't close a candle below 287.50, which I mentioned it in the chat, that I was gonna, that was my buying signal.
Yep, right here.
Which it didn't. Yeah, I didn't, for me, a signal will be a candle closing. If a candle closed below the area that I was, looking at, then I wouldn't even go for the calls. But because I saw it held that, even though it dipped to 285, but it wasn't like, a candle close there. It was just a quick dip, and then it went back up. That's what I bought.
Yeah. Yeah, I mean, go ahead. I'm sorry.
Let me see. Like 387
I got the chart up now.
Yeah, I see, like 380. So if this breaks, if in the morning we open it over 300, then I think we can get to 307, 308. That's where I'll be selling.
No, it makes sense. Yeah, and I was telling the guys earlier, I was telling them that when I map the lines, I always start with the 4-hour time frame, and if they're going to swing trade, use the 4-hour time frame. Because you get a good sense of where the stock's support and resistance are for longer term trades. No, it's a good trade. Me personally, I wouldn't hold, because I'd just be too scared, because based on all these crazy news,
Yeah.
That's why.
I know.
But no, I mean, we might get a bounce in the morning. Let's see what happens. But my concern is now we're getting more cases in New York. There's a second. I just saw a news article, another case in New York, and some in Vegas. So when you start seeing in Vegas, New York, Boston, these are big tourist areas.
I'm sure this is gonna go lower for sure. You guys call me the grace of the group, so like I'm like the short. As soon as I start going, like everything start collapsing. And I think it was like, when it was 3:33, you were like, oh no, you crazy, this shit's gonna keep going. Even Milton was like, get out of here. And then next thing you know, shit went downhill.
Yeah.
But yeah, I'm expecting maybe like a rejection of 305, 310, if anything, and then back to the next, the lower.
Yeah, it looks like 273 is the next level,
273, and then 250, I believe.
250, yeah, 259, and then actually
223 or something like that.
233. Yeah, 233.
Yeah. Those are the levels that I
so,
have for like since last year, because this was supposed to happen last year.
Yeah, but then the Fed started started pumping money in the repo markets, and they kept going up. Yeah, so yeah, we're gonna see what's gonna happen. Because it's gonna be interesting when they say, yeah, we're lowering interest rates, and then you have these with more reports of coronavirus and like factory production slowing down. I'm curious to see who wins, like what the algos choose to go with,
Yeah, another thing though, I mean, for people that place options, look into the airline, like to put the airlines,
like Delta,
because of all of them, they're now that they're gonna start closing. Trump, I think, is gonna impose more like regulations into like all the travel and stuff.
Yeah, for sure. And they're gonna dump more, like the cruise ships and all that. All them companies. They took a big dump. Like Delta took a huge dump from 55 to 45. Went down 10 points. But you're right. If it breaks 45, Delta's heading to 43, and then all the way down to 40, and then 37. And then really the real area of real support is 35. So, so for you guys that are new, let me move this out of the way. You saw what I just did? All I did was I just looked at the lines where the stock bounced before, see where the direction changed. That's all I'm doing. That's it. And you just look at those key levels to potentially take trades. So that's sort of how I do this. What other questions does anybody have? Yep, Boy is right. Yep, cruises, casinos, airlines, anything with tourism, anything with traveling, expect them all to take a huge dump. Any products that have major manufacturing in China, in South Korea, in Vietnam, all those companies are going to take big dumps too, like Apple. Now, before we end, I'll just tell you why this, like I understand, like people say, oh, the flu is worse than the coronavirus and more people die, but let me explain why this coronavirus thing is an issue and people should be concerned. Not because, so the coronavirus basically it's like the cousin of the common cold. But the reason why people need to be concerned with this virus is not because, that it's like HIV, it's going to kill you, like in that sense. No, it's that because it's so highly contagious and they don't have a vaccine and they're still trying to figure it out, that if you get a pandemic, meaning a whole bunch of people that get sick in one big, short amount of time, all those people are going to try to bum rush their healthcare locations or their hospitals. They're not going to be able to manage all those people that are coming in because they're sick, and a lot of people die. That's why it's a serious issue. So, if you got all these factories out in China and all these people are getting sick, and they all try to rush to the hospital, they can't treat them all. And that's what's happening in the epicenter where this all took place. They don't have the resources to accommodate all those people that are sick. So a lot of them are dying. That's why they're nervous here in America, because when you have these highly populated areas, like New York, for example, I get on the train, there's thousands of people on the train. One person gets sick, they infect the others, and it just spreads crazy. And then you got tens of thousands of people that are sick all of a sudden, and they were trying to get to the doctor. Even though New York has a bunch of hospitals, they may not be able to accommodate all these people. And that's the concern. That's why there's such a, concern about this virus, So yeah, the flu kills more people right now. Yeah, absolutely. But that may not be the case in 6 months when you got 100 million people with coronavirus, which is possible, which is very, very possible, believe it or not. So don't underestimate this pandemic, because it can be really bad because of that. But if they find a vaccine, we're going right back to new highs. You'll see that you'll just buy some calls and hold them. You're all going to make a lot of money going on. But if they don't, then this can get really ugly really quick for a while. All right. So any other questions before we end? No questions, guys? I hope you guys found this valuable, about the pivots. I'll share my my pivot points. I didn't necessarily build a watch list. I apologize about that. I should have did that, but I just kind of like free flow this. I just really wanted to show you like the pivots and all that kind of stuff and how you map your lines and how to look at certain things. So I'll promise the next webinar will be very, very focused. We'll just do like one topic and stick to one topic. All right, guys? And I'll post this in the room. So, if you have any extra questions, just post them in the room, guys. When I'm planning to do the next one, maybe I'll do another one next weekend, and it'll be very, very focused, I promise. We'll just stick to like one topic. All right, guys? So I hope you found this helpful. I'll post the webinar into the room, and if you have any questions, ask any of us, guys. There's a lot of good traders in there. Trust me, better traders than me. All right, guys? So have a good one, and talk to you later.